We're very pleased to have with us today Jason Martin, who is XBRL Services Manager at DisclosureNet. Jason has extensive experience in general ledger management, consolidations, and reporting, and he spent the last 6 years helping both large and small companies with their XBRL filings. His experience ranges from XBRL project management and product training to full XBRL tagging and taxonomy management. And he's been an instrumental part of several full software implementations for a variety of organizations across North America. Jason, thanks very much for joining us today. We also have Campbell Pride. Campbell is President and CEO of XBRL US. Campbell has been involved in XBRL really since the beginning here in the United States. Campbell was formerly a partner with KPMG, and then after that moved on to Morgan Stanley, where he worked closely on their XBRL implementations there. I want to welcome everyone here today, and I'm going to talk a little bit about what we're going to cover. Our agenda for the webinar starts off with a little bit of an overview on the Data Quality Committee. Then we're going to jump right into different kinds of rules that the Data Quality Committee has created, and we'll focus on some examples on context date error examples. We'll talk about element values are equal examples. We'll look at some examples of element A must be less than or equal to element B. We then will be asking some CPE questions for those of you who are getting CPE credit for this program. We'll follow that with a switch over to Campbell, who will talk you through how to run the rules using a tool that we've made available and how to resolve errors. And we'll talk about the impact of these errors on your own financial data. We'll follow up with a couple of more CPE questions and then close out the session. As we go through the program, if you have questions, please submit them by clicking on the Q&A button on your console. And you can submit your questions and we'll take them throughout the program. And if you have any kind of technical issues, you can send us an email at support@xbrl.us, and we'll do our best to get you back up and running. Thanks again for joining us, and I am now going to turn this over to Jason.
All right, thank you, Michelle. And thank you to everyone who has joined us today. Let's just talk about the Center for Data Quality. The Center is a group of committees that have contributed funding and other resources to support the Data Quality Committee's initiative to address the public's concerns about the quality and the usability of XBRL financial data filed with the SEC. The main activities of the committee are to develop free guidance and validation rules to help filers eliminate inconsistencies and errors in their XBRL filings. The end result will create reliable and comparable XBRL financial data that will help automate analysis of this financial data. The Data Quality Committee was set out to develop unambiguous guidance on how to tag XBRL data. Also, the goal is to provide freely available automated validation rules to ensure compliance and to reduce the risk of filing with tagging errors or incorrect XBRL data. The committee develops draft rules and guidance and makes them available to the public for a 60-day public review period and comment period. At the end of the period, they will review and incorporate input received in the final approved guidance and the validation rules. This public input period is very important, and we urge all filers to participate and provide feedback to these rules when a public review is underway. The first set of final approved rules were established for use last month, and during the webinar today, we will be covering some of these rules. The next public review period will be initiated sometime early next year. We encourage public companies to use the first set of rules to review their filings. And when the next public review begins, we hope that filers will review and weigh in on the draft rules and guidance. The greater input we get from both creators and users of XBRL data, the better the rules and the resulting data will be. The committee is also has regular scheduled meetings with the SEC on the progress of the rules and XBRL as a whole. They also have open meetings for all committee members to participate in, and public is also welcome to attend the committee meetings as observers. This is a great initiative and will help provide value to the filers and analysts who are consuming this data. So now that I have explained the committee objectives, we can now get into the 7 approved rules that filers will be able to test their filings against prior to filing with the SEC. On the screen here, you'll see a listing of all 7 rules that have been finalized, which include element values are equal, context dates after period end date, element A must be equal or greater than element B, DEI and blog tag date context, document period end date context, and document period end date context with back value check. We will be discussing and providing examples of these 6 errors, 6 error types in greater detail today. Each rule covers multiple concepts. The 7th rule covers situations where facts are reported as negatives, but they should have been reported as positive, so negated values or negated tags. XBRL US conducted a webinar in November that addressed that error type in greater detail. So you can access that archive of the webinar on the XBRL.us website. So I recommend that everyone visits the XBRL US website and the rules for the data quality committee and review them after this webcast. It will be very important coming up to your hopefully 10K filing if that's the case. So the first rule relates to the use of date context and the period end date on your DEI. This example tests that the date context of either the subsequent event, forecast values, or the entity common stock shares outstanding are appropriate. So let me just read this rule quickly to you. States that the date of 2015-09-30 used for payments to acquire businesses gross and the subsequent event type axis with a value of 230 million is earlier than is earlier than or the same as the reporting period end date of 2015-09-30. Either remove the subsequent event axis from the value, change the reporting period end date for the value, or update the document entity information. So basically what this is what this example is saying on the slide is that the wrong date context is used to tag the subsequent event or an account activity after the filing date. When tagging duration elements for the subsequent events, we would need to use a date context that starts after the filing period, and the end date of the context should be the date of the activity or the subsequent event. So, and we cannot tag the subsequent event with the same context as the period end date or the current reporting period date, when in this case would be 09-30, so September 30th. A few other examples would be the entity common shares outstanding, which is tagged on the DEI, and any forecasted values or maturities. Any entity shares outstanding should be tagged with a date context that represents the latest reporting period. With respect to forecasted amounts or maturities, these amounts should be tagged with the current reporting period date context. So though these numbers represent amounts that should be owed in the future, the value reported is as of the current reporting period. So for all the amounts in a table for forecasted values, you should always use the current reporting period date context. What will define the tag as current year maturity or second year, third year, etc., will be the element it is tagged to. So typically you'll see the multiple elements for year 1, year 2, year 3, or sorry, current year. So, however, the rule will flag elements with forecast members that are earlier than the reporting date as well. because they are no longer forecasts. So the second rule I'm showing today relates to the date context of text block tags and the fiscal period focus on the DEI. For example, the error message shown here says the number of days 273 in the date range reported for lease intangible assets and below market lease liabilities disclosure text block has 2015-01-01 to 2015-09-30 is not consistent with the document fiscal period focus with a value of FY. So, so the tags for the tags to pass this rule, the date context of the text block tags must be in line with the fiscal period focus context. This helps align the text block tags for comparability quarter on quarter or across your industry, so they can be extracted, used by regulators or investors automatically as soon as you file. What we typically see is that filers will take tables that have quarterly financial data with QTD or quarter to date context. Like for Q3, it would typically be July 1st to December 30th. But since this information is being reported in the current filing period, and it's a text block tag, whether a level 1, 2, or 3, it will need to be tagged with the full fiscal reporting date context. So January 1st to December 30th, or for a fiscal period, obviously January 1st to December 31st. Typically, filings cover a 90-day increment, so there needs to be an allowance variation in reporting length. So sometimes it's not reported on the calendar or exactly 90 days. So filing periods may be more or less than the standard increment. So this rule does have an allowance for 25 days, plus or minus. Again, this does not test non-numeric items that are not text block, and does not test transition period filings as well. The main point of this rule, again, is to line up the text blocks with the same date context for comparability, and that the fiscal period focus has been tagged with the right value. All right, so the third date context error on the slide tests the context date used to tag the document period end date and the value being tagged. So these must match. In this example, it states the ending date 2015-09-30 used for document period end date must match the value reported for the element 2015-10-30. Revise either the ending context date or the value of the document period end date. Okay, so basically what we have to have is those two dates being the same, meaning the context and the value. Typically, we see these errors when the report and tags are rolled forward, but the value of the tag the value of the tag was not updated properly or was updated with the wrong date as well. Those two options can happen. This is a very simple rule, but one that can be easily missed prior to filing. So again, it's very good to go out there and validate your filings before you file with the SEC. Okay, and the fourth date context examples test whether the date context used to tag the DEI information matches the value of the document period end date. So the error message reads, the ending date 2015-09-30 used for document type must be the same as the document period end date 2015-10-31. Revise either the date of the document type or the date of the document period end date. So it's basically taking that value that's being tagged and matching it with the context of the other tags of the DEI. Now, there are 4 exceptions to this rule, which are common stock, shares outstanding, depository receipt ratio, number of employees, and entity public float. So the date of the context of the tag values in the DEI are usually different than the period end date for these elements. In the example on the slide, the error states that the document type in this example and the value were tagged with the wrong date context of 10/31/2015. So the next rule we wanted to point out are situations where element values should always be equal. The example shown here, the example shown is with the value of assets and whether they equal liabilities and shareholders' equity. So this is a very simple accounting equation check. Simply, this is a rule to test the XBRL filing does not violate this accounting equation. This rule does allow for a tolerance of 2 for rounding. So if there are a slight rounding, tagging, it will actually be let through. Again, this is a basic accounting rule that has been applied to the XBRL data to ensure consistency and accuracy. So the last rule we will cover in detail today tests that the fact value of certain elements are less than or equal to the fact value of other elements. So in this rule, it actually states the value of common stock shares outstanding is 5 million, should be less than or equal to common stock shares authorized, which is 490 million. So it states that element A must be less or equal to element B. In the example here, we have common shares outstanding, like it suggested up above, they have 500 million, and we have shares authorized tagged with a value of 490. In this case, the rule states that shares outstanding must be equal to or less than the shares authorized. In my opinion, there are 2 ways this error can be produced by filers. In case 1, most filers that will receive this error will do so through the parenthetical information and not updating that information properly after the roll forward process, which I have seen a number of times, and it is an easy thing to kind of miss at times. So it's a good rule to capture this. A second way they will receive this error is by selecting the wrong element to tag the values. So maybe in the tagging process, you have actually mixed up the numbers and tagged the authorized value or the authorized element to the outstanding value. So again, it's an easy fix of just retagging those values to the right element. But now let's take a look at a few other scenarios that this rule will test as well. So as you can see in these examples, this rule is testing that the appropriate relationship is maintained in the facts reported for shares authorized, outstanding, and issued. Again, typically you'll see that in parenthetical information or in an equity note. There are other scenarios the rule tests with deferred tax liabilities, and there are a number of different rules related to the defined benefit plans. They get a little more complicated. But they should be fairly straightforward for you to figure out if you encounter those errors. You can view all the scenarios on the XBRL US website under the data quality page.
Jason, thanks very much. Bear with me. Okay, next we're going to go on to a demonstration of how to actually run the rules. So Jason shared with us a lot of good information about what the rules will actually perform, what they will do, and the errors that they identify and how they can be corrected. And now we're going to walk through a demonstration of how you can actually run the rules yourself. And again, these are freely available rules. The tool that we're going to show is also freely available. So I'm going to turn it over to Campbell.
Thank you, Michelle. Okay, I am just going to share my screen with everyone, and we'll walk through. Michelle, if you could stop sharing, then I can share my screen. That'd be great. Okay, well, what this is doing is what I'm bringing up here is the XBRL US website, and I'll just show you where to go on the page. We have, if you go to the XBRL US website to our home page, you'll we have a number of menus where you can look at data quality materials, and it's under this label here, data quality. You'll see there's 4 drop downs. There's information about the Centre for Data Quality, information about the Data Quality Committee. You can also get access to the approved guidance and the validation rules and see what they are. But then you can also, there's at the 4th bullet here is to check your filing with the approved rules. So you can, if you click on this, this will ask you for a term of use, and then you can click this. This is just to make sure that you understand that. Gives you details about using the service, and it's a pretty simple interface. It allows you to choose the file that you want to choose, and this will accept a zip file, and then you can run the filing. So basically, you just choose the filing that you want to run. I've downloaded some here. Let's just pick one of these. This is just an XBRL zip filing. This is the same as what you'd file with the SEC, and then you can just click run the filing. And then what this does is the zip file is loaded up into our server, and then it takes the rules and it runs them, and it comes back to you with what the rules are. And here you can see this one has run some non-negative rules, but we could run another one. Some of the rules we talked about just before with some things that don't match. If we look at this one here, it's just another filing, and then I can run this. And then this is running the same set of rules, and you can see here this is one of the ones that we talked about, which was where the assets and the liabilities don't equal. And you can see here it's a small company, obviously. They're putting 125,310. The liabilities and equities 125,130. You know, they've just obviously just transposed the numbers. So this will give you a list. You can see here of all for that filing, all the errors that the rules are reporting on. So that should be pretty easy for most people to run. And what we are also putting on this website is access to other tools that you can use to run the rules as well. So if you scroll down and as more tools become available, we're adding links to it. So just to give you an idea of how that works, so here's a third-party tool. In this one, we just have you can put a company name in, and then it allows you to go and search for them. So here's a company. I'll run this company here. Zoltec, for example, does the same thing. It's off. And the rule results will come up down the bottom here when it's completed running them. But this tool, in addition, also makes available the the filing, so you can look at the numbers. This also has some of the EFM rules in it, but here you can see the DQC rules, and this has got some non-negative rules in here that are coming up. But so then you can click on these, and then you can see the details. In this case, it's showing a non-neg item. So this is how you run the rules, but service providers are taking these rules and incorporating into their product. And the committee decided on an effective date for the rules to go into effect was the 1st of January. So if you're working on your 10K, you probably want to start running these rules against your 10K, so you can make sure that if there's any issues, you can address them now, and address them pretty early. The other thing to be aware of just when running these is that the committee meets on an ongoing basis, and that these rules are going to be constantly updated. And as those rules are updated, we'll be updating the service as well, so that when the rules are finally approved and you run it, it'll be updated for those changes. Just to give you a quick walkthrough of where the approved rules are, if you want to get more details about it, if you get an error, you can click here. This gives you the approved guidance and validation rules. This is a high-level summary of them. If you want to look at the public exposure comments, you can look at those. But one of the other things you can click on is you can look at the final version of the rules. So if you want to get, if you want to go and look, if you get an error, you can look at it. You can look at the rule. You can look at what's the purpose of the rule, how it's solved, what it's trying to address, and then it just gives you details of what you'd expect in the rule message. So this gives you details of those, and there's a number of documents here which details each of the different rule types, so you can go and look at those and learn more about why a rule is firing. So Michelle, I will hand it back to you. Michelle?
Hi, Campbell. Sorry about that. I was having a hard time getting off mute. Yes, I'm going to go ahead and share my screen again. Thank you very much. And actually, before we move on to the next section, we have a couple of questions that came in. The first question relates to the rules in general. The audience member wants to know, how do the rules differ from XBRL validation and SEC validation? Jason, maybe you can help us out with that question.
Sure, yeah. Sorry, sure. I think I hit mute twice there and put myself back on mute. So the SEC, the way I like to explain it to the clients I work with is that, and this is not in a negative way at all, but SEC is more like iceberg watchers. So a picture of an iceberg, 10% on the top, but you have this 90% mass in the water. Within that iceberg, you have your Edgar Filer Manual, XBRL 2.1, XSC content model. So you're taking these different validation rules and guidance, and we're trying to validate this big iceberg. Well, the SEC, when we file with them and we do our test filing, they're really only concerned about the errors and warnings, and we all know what happens when we file errors or warnings. So really, they're just looking at that top peak. Sometimes the other ones down below do get caught by them, but underneath those errors and warnings, you have inconsistencies, best practices, informational or LC3 errors. And then below that, I like to call it the abyss. It's the business rules, kind of like things you got to capture by eye, whether you're using the right element to tag a fact or not. I mean, those are some of the things that are in that abyss. So what these validation tools do is really take a look at that ice under the water. So it's like sending a team of scuba divers down there, and they're going to check it out and make sure that we are not finding with inappropriate inconsistencies. Having negated values not being negated, you not following proper best practices, or of course very simple informational errors such as LC3s. So really, those rules really take a deeper dive into that filing, where the SEC just takes a look at the high level and makes sure that there's no critical errors with it.
Great, thank you. A couple of other questions, and Campbell, I'm gonna direct this to you since you're intimately involved in the committee. And who is on the committee, and how is the committee comprised? Is it primarily SEC filers? Who is on the committee that is developing the draft set of rules?
Thank you, Michelle. Yeah, so the committees, we've tried to make a committee made up of a broad user group of the data. The primary focus of the committee is to involve users of the data. So there are folks you'll see on the committee. If you look at the committee page on our website, you'll see participation from Bloomberg, from Standard & Poor's, from the CFA Institute. And so, and a company called CalcBench. So we want to try and make sure that the users are involved, the people who are using this data. So they're putting a lot of input from the errors they're seeing from trying to review this data. So as part of that, one of the things that we try to do in terms of reaching out to folks, and so those public reviewers are so important, is so that we can get feedback from a lot of the preparer community. And to do that, one of the things that you'll notice at the committee, we don't have direct preparers involved. One of the things we will be doing over the next couple of months is looking to get preparer companies involved. So if you're an individual company and you'd like to get involved in the committee's activities, please let us know. As a surrogate for that, we have a number of the large filing agents are involved in the committee as well. So we're kind of getting inputs from the preparers through that perspective. And then we also have academic participation on the committee as well, and that's so, you know, obviously they're a big user of this data as well. So the committee we try to make the committee as broad as we possibly can, so it represents primarily the needs of users, but then also obviously represents the needs of preparers. And to do that as well, we have obviously the filing agents, and we also have the AICPA, who is also involved.
Thank you, Campbell. A follow-up question to that is, are the SEC and the FASB involved in this process at all?
Yes, so the FASB is an observer on the committee. So Lewis Mathern from the FASB attends committee meetings, and the minutes of the meeting are recorded. It's an open meeting. The SEC is invited to these meetings, and then we have regular update meetings with the SEC on the status of the committee and what our findings and results of the work the committee is doing.
Great, thank you. The next question I have is there ever a situation where the rules are wrong and they shouldn't be followed?
So one of the things we do is, part of the review process is we'll see problems in filings, and then we'll identify that problem, and then construct a rule to prevent that. And then what we do is we take that rule and we'll run it over historical filings and see what the impact is, and then analyze each of those individual filings to determine if there's exception cases where a rule is firing but it shouldn't. So you will see in a number of cases that, you know, for example, with negative values, there may be valid reasons for the rule to fire. So what we do is we have the logic of the rule will determine if this will list certain exceptions where it may be valid. So on some of the dates that we have, these date rules, you know, they may not be applicable if there's a change in the reporting period for a company. So it'll exclude, for example, anything with the T in the form name, like a 10KT or a 10QT. So they would be excluded from, the rule wouldn't run for filings which have that denomination for the form type, where a particular rule is checking like periods, for example. So we try to eliminate all the false positives as much as possible. If you have a case where you think it is a false positive, you should definitely let the committee know. And then in the next round, we could go back and we can investigate that. And if it's valid, then we can adjust the rule to make sure that it's not going to fire in those circumstances.
Thank you, Campbell. The next one, how often are the rules updated?
So the rules are the rules are updated. We try to have as many cycles as we can in a year. So typically, in the first year we've had the first release of the rules, and the next year we're going to have another two releases of rules. And the reason is obviously we want to make sure that the process is as robust as possible, so we're not creating unnecessary work for people who are trying to prepare these filings. So there'll be a public review in the first half of the year, then there'll be a second public review in the second half of the year, and if there's problems with those rules, the rules will be updated in the interim. And one of the things I showed you before was where you could see the details of the rule. It's all on something called GitHub. So if you have any comments, you can also put comments on GitHub as well about the rules, so that we can get feedback between public review periods. And so then if there's something about a rule you don't think is appropriate, then we can capture that and make sure in the next release of the rule that issue is addressed.
Okay, great. And I have one more question before we move on, Campbell. Question came in about the tool that you demonstrated to check results. And the question is, you're asking us to, the assumption is that you're uploading financials that have not yet been submitted to the SEC. Is this site secure? Can I feel comfortable doing that?
Right. So one of the things we do with the site that I showed you, the XBRL US site, is the terms and the conditions, obviously, where I signed those. What we do is we run those on a server where we have a review done of it like a SOC, like a SOC 2 or an SSAE 18 review on that to make sure that there is good security in place around and have controls. None of those filings that are submitted to that site are maintained or kept. There are also third-party providers, and they may provide similar assurances as well. The one I showed you doesn't, but if you're going to run one of these, you want to make sure that obviously you've evaluated that. Now, you also want to check with your provider that they're supporting these rules, and we've talked to most of the filing agents, and they have the intention to do that. So you really need to confirm with them as well. We've made this tool available in our secure environment, so people can run that, so that they can run the rules if they want to, and so that's available for folks to run. However, obviously, if you're going to be assessing the security of someone, and your filing agent supports that, then probably that's maybe your first port of call. But we made this available as an option so that people could do that if it wasn't available through their filing agent.
Okay, great, thank you. Okay, I'm going to move to the next slide, Campbell, and now turn it over to you.
Okay, so one of the things, just to give people a feel for where we're seeing most of the issues in terms of running these rules, this is just giving you a breakdown of the rule number, and we mentioned earlier that there were seven rules. And when we say 7, that's it's almost like there's 7 categories of rules. But one category is non-negative rules. So non-negative, there can be lots of different cases of elements that are producing errors. So what this table shows is just the 10 biggest issues from running the rules. And this is based on running the data quality rules over all the filings that were made in 2015. And what you can see here is the first one is the rule that Jason talked about. So this is rule number 6, which is the number of days and the date range reported for a value is inconsistent with the document fiscal period focus. So this means that, and this perhaps like text block items, they may report, give it a duration of 3 months, but the document fiscal period focus is FY, which means it's a full year. So what this means is that the periods on those documents, on those text block items, are going to have to be updated. The other thing is that we often see too is sometimes the document fiscal period focus is incorrect. So rather than doing a sometimes it's not updated. You go from the second quarter to the third quarter, but it doesn't get updated to third quarter. This causes some real problems for folks because a lot of the data aggregators will use this data to determine which period is being reported. So it's important to get that document fiscal period focus correct. It's also important to get the text block items have the right date range on them. So that makes it possible for people to line that data up and make sure all that data is consistently reported. And so that item seems to be the biggest in 2015. The second item is just the subsequent event type is basically people saying this is a subsequent event, but the event, the date they're putting on it is before the year end or is at the year end, so it's not really a subsequent event. And this happens because in previous filings they've used this axis and they haven't taken it off going forward into the next filing. Then a number of the rest of the items are, items that are negatives that shouldn't be. There is some there for you'll see there's a number there for number 36. And this is just the period end date doesn't match what it is for the element. So you've got a period end date elements being used, but the period end of that element of that value doesn't match the value that's actually reported. So it's some kind of typo that hasn't been updated, moving from filing to filing. The next one, which is 549, this is the one that Jason talked about earlier. This is where the scenario axes, and you've used a forecast, but the value that's reported is not in the future, it's in the past. If you're making a forecast, typically not going to forecast the past. That makes it very easy. So this is just really flagging those where you have used the forecast member inappropriately. And the rest of them are non-negative items, where items are being reported with negative values when they shouldn't. We can talk about those in a minute. So basically, for the rules to date, have generated approximately, just from running it over the 2015 filings to like a week ago, we had about 78,000 issues that were identified just from these seven rules. So you can, 7 rules may not sound like much, but actually it actually result, these are data problems that people on the consumption end have to deal with. So that costs time and money, and a lot of these things are just relatively simple to solve at time of production. So I think, Michelle, we got time. We got a question now, or do you want me to give you a demo of how this data would be used and some of the problems it causes?
I think if you could show a demo right now, that would be great. But then, just for the audience, if you have questions, again, just click on the Q&A link, and we'll take those questions as they come in. So, Kim, I'm going to stop sharing and turn it back over to you so you can present your screen.
Okay, so when we did a run earlier where we ran a particular company, and one of the companies we reported, we saw this is the one that we ran of one of these filings. It was the zip file, so I thought I'd bring this filing up, and you can see in this case they've got accumulated depreciation is flagging as a negative. The company's entered accumulated depreciation, depletion, amortization with a negative amount. You can see here the 1880346. So just to show you, how this manifests itself, one of the things that we've done is we've made all this data available online. We have a toolkit that you can use to go and look at this data. And if you go to the XBRL US website, you can read about that. But that toolkit basically allows you to, I bring it up here, you can see we've got a section on using data. What that toolkit allows you to do is to bring that data down into Excel spreadsheets or into Google Docs. Here it is, the data analysis toolkit. And what we've done is just basically make an API available. So you can pull data, you can pull it into spreadsheets, and it's basically pulling the data that's been filed with XBRL. So you can read about it here, but the details are of all of this and how it works are on something called a GitHub site, but that gives you links to the spreadsheets that you can download, and how you can pull this data. So it's got quite a lot of detail here, but I'll just show you how it works. So we have here, I've got just a Google Docs spreadsheet, and basically it's just like an Excel formula. We have something called XBRL values, and this function will just go and pull data. So I've taken the accession, which is this company we were just looking at here. This is the accession number for this company, and trying to protect the innocent, giving you the details of who it is. So you can see here, I'm pulling the element for this company, and you can see here are these values, right? For 2013 and 2014, you can see they've got, this is the accumulated depreciation. This number is coming in as a negative amount because it's been tagged with a negative. And the rule's saying you should be really bringing this in as a positive amount. The issues becomes because if I want to try and add these numbers together, someone's going to write a formula which says I'm going to take the property, plant, and equipment gross, I'm going to minus the accumulated depreciation, I'm going to get my net. So you can see here with this, if you replace the element name on these, it's going to pull the data back. This is giving you gross. This is giving you it looks like it's giving you the property, plant, and equipment for every single piece of property, plant, and equipment they have. This is just pulling the data from the database. So you can see they've dimensionalized it. I put member in here. It's just pulling back all the members. But you can see if it doesn't have a member in it, it's going to be the total. So, so for 2014, they've got $3 million in property, plant, and equipment. If I put the accumulated depreciation in here for this, you're going to see I've got negative 2204. This should be positive, so that when you do the calculation to get through to the net amount, it should add. It's not in this case because the companies used the net amount, right? So it should, once you minus that off, for 2014, it should come down to this 869 total. This is a really, really kind of a silly example, but kind of gives you the point is once these things are entered in as negative, it causes doubt in the mind of the person who's trying to consume the data. They've got to then write code to fix the negative or the positive amount. So it's really important that this data gets corrected because if it's wrong at the start, it means every single person downstream has to fix it. It's much, much easier to get it fixed at source. But this tool is available, so if you want to use it, you can go to the website, you can read about it, you can use it in Google. We're uploading some new Excel spreadsheets as well with those functions built in. So if you like to use Excel, you can use this tool as well to pull data. And you may want to, if you want to pull that data for your own company and see how it looks in these tools, you can do that as well. And if you need any help with that, please let us know. So Michelle, I think we have some CPE questions.
I think that the CPE questions were actually shown in the last, when we showed the initial set of CPE questions. So I think that everyone should have responded to their CPE questions at this point. But I'm going to go back and share my screen again because there's a few more things that I wanted to address. Bear with me here. Okay. I just want to share with everybody that we do have some other opportunities to get involved in the committee that we've been talking about. The committee holds regularly scheduled, well, not regular, well, they periodic meetings every few months. And the next meeting takes place January 7th at 9 o'clock Eastern. You can actually go up to the committee page that Campbell was showing, and you can register to attend there. You can also learn more about the committee, obviously, on that page. But it's a really good opportunity to listen in and to see what people are talking about, to see what some of the data consumers that are on the committee have to say. As Campbell mentioned, we have people from Credit Suisse, we have people from Standard & Poor's, from lots of organizations that are actively consuming your data today, and find out what they have to say about the data that they're receiving, and how they can improve on that, how that data can be improved upon. And I think, let me see if we have, we have another question that came in. The question is, will all of these rules be ultimately incorporated in the SEC preview validation, or will we always need to add another validation on top of that? Campbell, maybe you can address that question.
Yeah, so one of the things that we would like the SEC to do is to put it into their test system potentially, so that they can actually run those as part of that. That's really going to be part of the SEC's decisions. One of the things that we have done as part of the committee is to produce running code which can actually run. So you can actually take the code from, if you wanted to, you could take the code from the GitHub site that's there, you could download it into your own environment, and then you could run the rules in your own environment if you wanted to. But that implementation of the rules, we call it a reference implementation, that has been that's been written in the same software that the SEC uses. There's an XBRL tool called REL, and so the reference implementation has been written in that. That's an open source tool, and that's what the SEC has chosen to use. So what we've tried to do is make it as simple as possible for the SEC to incorporate these rules into their process. They may be running it themselves. So really that's really a decision that the SEC would have to make. But we've tried to set this up in a way that would make it very, very easy for the SEC to include these rules in their test system. So when you run your filing against the SEC, it would be possible to include those rules in there. But once again, that's a decision that the SEC would have to make. So, obviously at this point, it's too early for them to make a commitment to that. They're not sure. They really need to assess, the stability of the rules, make sure that they agree with them. Obviously they've been involved in looking at them as part of the public review. So, that would be the hope that would be a seamless transition to do that.
Great, thank you, Campbell. Okay, I want to thank Jason and Campbell very much for giving us a presentation today, and thanks to all of you for joining us. I want to mention that we do have another webinar coming up in January. And you can see it on your screen here, January 27th at 3 o'clock, we'll have a 60-minute, essentially a conversation with Mike Willis. Mike is Assistant Director, Office of Structured Disclosure, Division of Economics and Risk Analysis at the SEC. And so he's going to share with us his thoughts on the current implementation, on some rule proposals that are out there from the SEC, and on what we can expect going forward, to the extent that he can share that with us. So we're really looking forward to that. And tomorrow, when we send a follow-up with the replay from today's program, we'll also send you a link to register for that event in January. And again, it's a free program from XBRL US. CPE credit is offered for a for nominal amount, and we hope to see you there. So with that, I want to thank Jason Martin from DisclosureNet and Campbell Pratt from XBRL US for joining us, and hopefully we'll see you in January. Thank you.